today's World Insight. The new Beijing Stock Exchange in the pipeline, new rules, new listing system, the impact on small to medium enterprises and public investors. And from 5 members to 8, the new development bank membership is growing. What does it mean for the international lenders' mission? Catching up with NDB President Marcos Troito.
By adding new members, you basically just expand the geographical scope.
Here is our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei. We begin with China's newest planned stock exchange in the Chinese capital. The Beijing bourse will open in addition to the 2 existing stock exchanges in Shanghai and Shenzhen. Chinese President Xi Jinping announced the plans for the exchange during last week's China International Fair for Trade and Services. Xi said the new exchange is set up as the primary platform to service innovation-oriented small and medium-sized enterprises. So why is the Beijing Stock Exchange an idea whose time has come? What does it say about the international financing environment? Let's ask our panelists. For more on the latest with the Beijing Stock Exchange, in Beijing, Hong Hao, Managing Director and Head of the Research at Bocom International. Also in Beijing, Li Yong, Senior Fellow with the China Association of International Trade. Last but not least in New York, Anthony Chen, former JP Morgan Chase Chief Economist. Gentlemen, welcome to the program. We do not know yet much about the latest rules regarding the Beijing Stock Exchange. Mr. Hong, what do you expect?
Well, obviously, because of the strong endorsement from the top, this is the sort of the fastest development stage for any exchange in China. I think it's going to, for most of us, in the market, we understand it as a complement to the existing stock exchange in Shanghai and Shenzhen. Mm-hmm. But obviously, the new exchange is going to cater to the small and medium enterprise financing. And those companies really need more help from the financial sector. So I think, as far as we know now, the details are still scant, waiting for more details to come.
One of the things people have been doing over the days since the big news is being announced, Mr. Li, is the comparison between this newly coming Beijing Stock Exchange with those in Shanghai, Shenzhen, and even in Hong Kong. What is your take?
I think basically this is going to be it is very different from from Shanghai and Shenzhen Stock Exchange. Basically, it focuses on the financing for the small to medium-sized enterprises, and in addition to that, it has a unique 3-tier system to develop, meaning that. Right now the select tier is going to be listed, and then future listed companies will be chosen from the other 2 tiers, basically from the innovative tiers, which is a total number of over 1,200. And currently the select, the number in the category of select is just 66. So I think the system, listing system, is going to be very different.
Mr. Chen, for overseas investors, is this a new opportunity? What do you need to know in order to make sure it is an opportunity?
What we see from the West is that this is somehow an opportunity for China to extend the dual circulation policy. China certainly wants to hedge against possible global shocks in their financial markets and in their overall economy. Mm-hmm. And also these small and medium-sized companies in the past have had difficulty borrowing money from Chinese banks. And so now this creates great opportunity for them to actually list in the equity markets and allow them to grow.
One of the things, Mr. Chen, many would ask, what kind of overseas investors would be interested in things like the Beijing Stock Exchange as it claims to be. Can you be more specified?
Yes, what we're hearing or what we're seeing is that somehow there's a movement towards developing a lot of the companies that have an innovative type of emphasis and moving away from the super large tech companies. These companies obviously offer great potential growth, but also great risk. So I think that the overseas investors would be happy to look at these companies, but probably in a portfolio or in a group of them, because let's face it, if they're small, and they are, they're going to be a lot more risky. So you want to invest in sort of a portfolio of these companies rather than one or two, because obviously not all of these companies are going to be super successful. But again, investing in a portfolio manner would be something I think that would be exciting.
This is an interesting development because, it is going to really resolve the dilemma of the Chinese high-tech, small, medium-sized companies having to go to NASDAQ, for example, to get the financing. So this is an opportunity.
But they could go to Shanghai, could go to Shenzhen, and could go to Hong Kong.
No. They are totally different.
How come it's going to be different?
Because in Shanghai and in Shenzhen, the requirement is so different. There's certain threshold that those companies, small, medium-sized companies cannot really reach. That is the reason they are not listed. Okay, in the other two stock exchanges.
Mr. Hong, would you like to respond to that? Is it really going to be that much an opportunity as Mr. Li just claimed?
It remains to be seen. I think for now, many of the more promising SMEs are getting, different financing rounds, from PE investment firms, right? Very true. So, each round of finance raising, they revalue the company upwards. So by the time they get to the market, the valuation multiple would be so high that it's almost prohibitive for normal investors to participate, because it's just too expensive. So I think, getting the public financing into these companies at an earlier stage, it will actually allow a more a bigger participation of the general public into the funding of high-tech growth in China. So I think for that purpose, this stock exchange, the new stock exchange, actually serve a really good purpose. For the new tech board listed in Shanghai, there is a rather restrictive investment hurdle, for people to participate. So you need to have a certain amount of balance in your trading account, so to prove that you are eligible to put money in those companies. And I wouldn't be surprised to see sort of a more restrictive investment hurdle, for people to put money in this new exchange. But having said that, many of the smaller firms, they don't even have earnings, right? So many of them don't even have revenue. I don't know. So it is. You're right. It is kind of risky, for general public to participate without knowing the specific risk.
Mr. Hong, since you've been in the stock market, shall I say, field for quite long, let me just follow up by asking you, Shanghai, for example, you see some of the Shanghai Stock Exchange boards earlier have very restrictive measures. For example, companies have to make profits at what threshold in order to continue to be listed at the stock exchange. But later, over the years, it relaxed that. As long as they are meeting certain kinds of priorities, how should we understand with the issue of innovation, of creativity, the so-called danger and the possibility, once again?
Yeah, I was on the review board for the new tech board in Shanghai before it was launched. Back then the concern was that, some of the companies, don't even have earnings, and therefore the valuation is difficult to calculate. And also it can become very speculative, because you don't have the trading daily trading limits anymore, right? So on the first day of trading, you have no limit, and then on the second day onwards, you have 30% up or downside trading limit, which is substantially wider than the existing stock exchange. So rules like that, we many people in the Chinese stock market hasn't even experienced. Back in the early 90s, there wasn't any trading limits at all, and the stock market was very volatile. And I think that's the reason why the authority put in the trading limit. So I think your concerns are legitimate, and I think the details are still being sorted out. But I wouldn't be surprised to see more sort of a restrictive criteria for people to be qualified to invest in this new stock exchange.
Well, journalists always tend to be more critical than most of the investors, so that's for sure. We're in very different trades, I guess, Mr. Li.
The initial batch of listed companies are supposed to be more resilient, more controllable in terms of risk, because these 60 companies, even though they are small in number, but their total volume of trade in the old national equity exchange and quotation system, they account for over nearly 75% of the trading value,
Right.
and about 40% of the trading volume of the trading of the transaction. So I think the initial start is not going to be as risky, and down the road, I think the regulatory bodies, I think they are going to, monitor, watch, and adjust their policy.
Mr. Chen, when we see China's capital market reform and also China's financial reform, how do you see this could be one of those steps for overseas investors?
All you have to do is to look at what happened to these 66 companies on the first day that the announcement was made that a Beijing exchange was going to be created. The prices did not go down, they went up. So even locally, the excitement is there. And I think that if that excitement continues, foreign investors will pay attention to that excitement and certainly would want to participate, assuming that they were allowed to participate. But once again, participating in a mutual fund type of format where you gather a portfolio of these companies would probably be the right step, because many of these companies obviously are much riskier than the companies that we see in the Shanghai Exchange, where the large capitalization companies have found a home.
Right. Another thing, Mr. Chen, just to follow up about that, people are doing comparison for international investors. Is obviously the whole world, the stock exchanges are the options on their plate. So in Beijing, if it starts, what does that mean? How much of an option? What details do you think investors like you would really look into before you make the decision?
Certainly want to see what the history of corporate profits, the accounting records, that has always been a bit controversial. But if you get information, good accounting information of profits and revenues, that is something that international investors will certainly be interested in. And if that information is forthcoming, there will be quite a bit of excitement.
Both China's so-called inner circulation and outer circulation issue, and also China's finance reform vis-a-vis what's going on in the negotiations between China and the United States and China and Europe. A lot of things are actually in the backdrop. How do you see really this decision being made in that much bigger context?
The chairman of CSRC actually announced that the opening of the Chinese financial market is going to be further and deeper than what it is now. So I think it's trying to inspire the confidence from foreign capital, after months of sell-off in the Chinese market. And then I think at the same time, the dual circulation strategy really is sort of the grander scale of things going forward. Because ever since the pandemic, I think, the domestic demand hasn't been as strong as we hoped. But then, the export sector of China is going full steam, because, China is one of the few countries left, who can still produce at full capacity. All right. So I think going forward, more and more countries will realize this and, try to relocate production facilities overseas. So as a result, getting funding, getting investments, in the physical economy could be a bit more tricky than before. So, the dual circulation strategy is devised under such circumstances, to sort of anticipate, what is going to happen in the future. So I think, being, part of the dual circulation strategy, having a solid and sort of a liquid internal financing market is the key as well. Especially, these SMEs, it's almost inscrutable from outside. It's very difficult for people to understand their growth trajectory and the accounting practice and all that. Even for a domestic investors. And I think that's one of the reasons why, the Xinjiang Bank, the new board that launched in Beijing a couple of years ago wasn't a huge success, because many of the numbers, the accounting numbers, are inscrutable to the domestic investment public. So I think going forward, hopefully, many of these things can be changed, and hopefully this new exchange can fit into nicely into the dual circulation strategy going forward.
Mr. Li, I want to also jump to your expertise. When it comes to trade, of course, you've been doing a lot of research about trade policies and things. So how much do you see the potential, of course, this is a very big topic, the potential of China doing trade on the earlier terms with the rest of the world? And how much do you see China really have to, in a way, rely on its own market, including the stock markets, to generate the new blood, quote unquote?
I have to say that dual circulation, domestic circulation, and the external circulation does not really exclude one another. So in that sense, I think trade will not rely on the willingness or the preparedness of Chinese companies, to whether they want to participate more domestically or less internationally. I don't think this is the case. So external environment is going to be the determinant of how the trade is going to perform. And this, this new stock exchange in terms of domestic circulation, I think it is going to inject a kind of a financial stimulus for small to medium-sized companies, because if you look at this, the structure of the economy, small to medium-sized companies account, a majority of the economic entities. 90% of the companies in China, big or small, are kind of small to medium-sized companies. So they are important. They need to develop. If they develop, the economy is going to develop, and the domestic circulation is going to be heading towards a healthy trajectory. This is my take.
Mr. Chen, final words.
Final word is that I think that the Chinese government is trying its best to create as much opportunity as possible for more people, for more investors, and for these smaller companies. So I think in the long run, it's a positive development and not something to be worried about, because if more people can participate in this common prosperity, how could that be a bad thing?
All right. One of the things, the most important is investors ask, are you going to invest in that stock exchange if it comes into being? I have to ask every one of you one by one. Mr. Hong?
It really depends. As an economist, that's a standard economist answer.
I know.
Right? So it really depends on, whether we can find, good companies to invest in the new stock exchange.
Right.
And let's hope things go that way.
Okay. You've already given that on the one hand, on the other hand, answer almost by an economist. What about for you, Mr. Chen? You're also an economist. What's your answer?
The answer is absolutely yes. If we have the available information that we have for other Western companies, absolutely yes.
Mr. Li?
Yes, I think, when I'm able to participate, there will be, I think, a situation when those institutional players are giving us a kind of a bigger, better environment, and then I will definitely participate in.
So there is precondition. I can read that. Thank you so much, the three of you, for joining us. Li Yong, Hong Hao, Anthony Chen, really appreciate it. Thank you so much. 恭喜发财.
Thank you.